All right, everyone. So today I'm going to explain how to buy pullbacks, but specifically uh, for day trading and using the hourly and the 5 minute. And so let me explain something. So first thing you have to understand is that when you're buying a pullback, you just need two time frames. You can use three if you like, but at least two. And the second thing is that you have to be able to see what the rally consisted of. Because you're going to buy a pullback, right? You need to understand what this rally is. This is the rally, and this is the whole pullback, right? So you need to understand what is the quality of the rally, meaning what does it consist of? What is its quality? And by quality, I mean the price volume characteristics of demand. That's the demand quality. All right. So the one way to do this, and I'll show you a real example and all that, but the idea here is one way to do this is to chop it up and into, let's say, a column and get the volume. All right. Why do we do this? Why? Because we want to identify where is smart money. Where here is the most amount of money. All right. Because when it pulls back, the chances are that area where there's a lot of money is going to get active again. And if it gets active, and then we look at the lower time frame to see if it's getting active, and it's going to make, it's going to move, it's going to go back up. All right. So I'll show how this is done and give examples. But the first thing you have to realize is money equals volume equals support and resistance. Support resistance equals money equals volume. So high volume equals support resistance. Why? Because that's where the money is. All right. So this is very important to understand. I'm not going to go into all those complicated definitions of volume because it's really not that complicated at all. It just, you have to understand it. What you really need to know is this: high volume equals support resistance. All right. And also high volume equals a lot of money. It's common sense. There's a lot of volume, not one contract, not two contracts, like 1,000 contracts. It's a lot of money, right? So that's how you identify the footsteps of the composite man or smart money. All right, so we're going to buy pullbacks. So here you see the hourly chart, and you see that there is a rally. So obviously, you have a rally, you want to buy the pullback, right? It's not that complicated. You have a rally, you want to buy the pullback. What is a rally? Obviously, it's a bigger move in one direction with trend. Trend is, rally and trend need to go together. So we see that this is an uptrend and it's going to come back and we want to buy. Yeah. So what you're taught typically is buy the halfway back or buy 68%. Or buy creek and ice or something like that, or buy some fib retracement. This is incorrect. Because if you do that, in a lot of markets, it'll fill you and then it'll stop you out. So the question is, how do you know that move, the pullback, isn't going to go right down, right through the low of the rally? You want to buy it at a level, but how do you know that it's going to hold? How do you know the pullback's going to hold and you're getting a good price at a good area and not going to get screwed? Because if there's nothing to support the pullback, the price will just go right through the low and you're going to get filled and stopped out at the same time. So you got to know what's there within that rally. What the hell is there to stop the down move? Okay. Now that you understand that, we look at this rally. Okay, we look at this rally. this rally is going to get chopped up into equal pieces with volume. So we see that here in this chart. You don't have to use this chart, you can use any chart with volume at price. Any chart with volume at price, whatever it is. Candle, range, Renko, PNF, doesn't matter. But it needs to show you high volume at price. It must show you this, otherwise you don't know where the money is. Money equals volume. You want to know what level has a lot of money. All right. So here we can clearly see that this rally, this area here has 13. Where it says 13. What is this? This 13. This 13 is actually 13 times 10,000 contracts. So that's 130,000 contracts traded in this little block. That's a lot, relatively speaking, when you only have 4, 30, 20, 8, right? And then it gets heavy up here. But here you have 130,000 contracts right there. You can see it very clearly right there. I'll circle it. See that? Right? Right there. That is your point of reference. That is your support, or at least potential support. You want to see what happens when price goes there. 130,000 contracts traded there. 130,000 contracts. Now you can do the math and you'll find out how much money that is, multiplying it by whatever. So now price is going to pull back. It's going to pull back on this chart. It's pulling back, pulling back, pulling back, pulling back, pulling back. Where does it stop? It stops at that same area, 130. So we can see that high volume equals a lot of money, equals support, because there's a lot of buyers there, because they're still there, and new buyers may also be coming in at that level to buy at those cheaper prices, which is what the pullback represents. Right? Another opportunity to get in where smart money got in, and now you see the white highlighting, right? So that's because they're buying. Okay? So what did they do? They look at this level, they buy it up at that level, and that gives you the bounce, and bang, it goes up. Why did it stop here? Because here about 80,000 contracts traded. And that is a lot of money, therefore it's a lot of resistance, therefore it's a place for sellers to sell, and that's where it's going to stop. Okay, now we're at this point here. Okay, now I still want to go long. I still want to go long. All right, so where am I going to look now? Well, at this level you have 10, which is 100,000 contracts, and here you have 90,000 contracts. 190,000. 100 here, 90 here. So now it's going to pull back. Let's let it pull back. Where does it stop? That same area. Ding. Right? And that's where it goes up. Right? Right here. I don't know where the hell I am, but right there. Okay. Now, where does it go back down? Same place. Right here. Why is it stopping there? it's stopping there because it's a really good place to buy. That's where buyers bought, and more buyers are going to buy there again and again. And now, get the next move up. Where does it stop? Where the sellers were, that 80,000 contracts. Okay? Remember, until eventually it breaks through, right? And now it's pulling back. So I have a question for you. From this, you can identify support and resistance levels. This level is holding because of all that volume, tap, right? So we mark that level, all right? Because if it comes back down here, I want to see if it's, the buyers that continue to buy. This level was good here, 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 until it got absorbed and broke through, which means now we'll place it up there. Because that's where the sellers, that's where they said, came in and they stopped the move. They're selling. How many? 130,000 contracts and sold. So these are our two support and resistance levels based on actual buying volume, actual demand, and actual supply. Okay, very, very logical. Those are your levels. So now we're going to only trade at those levels. Unless it breaks and we find another level, that's the only place where we're trading. Now, understand this. We're not trading that because an order block or, VWAP or some shit. We're trading that because we can clearly see there's a hell of a lot of money, a lot of demand and supply at those levels, because when price was here and had 100,000 then 90,000, there was so much demand that price shot up. Why? Because they accumulated everything. They bought everything. When that happens, price is going to go up. It's going to mark up. Here, they sold, and that's why price went down. They sold and they distributed, price goes down. Bought it, went up. Here, they sold. That's why price goes down. The high volume plus the price action after it tells you this is distribution. The high volume plus the price after it tells you this is accumulation. And accumulation and distribution are support and resistance. Bingo. Okay? So this is based off of actual buying and selling volume activity, actual money that's traded at those levels by strong hands. All right? This type of support and resistance is different than extreme highs and lows within a range. That's also price-based support and resistance. But if this is what I'm showing you is like volume-based support and resistance, and this is very, very, really good. Okay, and if you have both together, those levels are really, really good. All right. So anyway, I think that's about it. Have a good evening. Bye.